Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. So some of you guys actually follow Harry Dent, some of you guys don't. I actually think Harry Dent has a lot of good stuff to say on his big fundamental outlook. Sometimes he's wrong on his short term. Short term, who knows what's going to happen, but long term, we can see what's going to happen. Everyone knows what's going to happen long term, right? But here's some real fiery evidence about the next biggest stock market crash is not too far away. Meaning over the next 12 months, we could see a significant move in the economy on the crashing side of things. Let's actually check this out. You know, he actually did an article here say, forget Brexit, EU has much worse problems. The Dow dropped nearly 1,000 points, 5% on the London FTSE, and the London FTSE dropped 10% after the Brexit vote surprised the markets on June the 23rd. After 2 days later, though, the markets were marching back up again. They're just these markets are just like on crack. They react to the political events, but totally miss the fundamentals. Yes, Brexit is important. Years from now, it will be recognized as the beginning of the end for the Eurozone experiment. It isn't just about renegotiation on trade agreements with Britain. It initially shows of a slowing of GDP. It also is about the threat of that more countries will choose to exit the economic bloc. The Euro and Eurozone have 40% plus unfavorable ratings in polls in France, the Netherlands, and Italy. That many areas within the countries will break free of their overlord, and this rush from nationalism will spread across the globe in wildfire. But here's the 800-pound elephant in the room I talked about in the details of this magazine he was writing here. The one Wall Street seems to be blind at the moment. Italy is the next Greece. It's bad. Non-performing bank loans have risen to 18%. At 10%, most banks are technically bankrupt. That's the percentage of capital and pledged deposits they have against bad loans. Our pledged deposits, not theirs. At 18%, they're no longer technically bankrupt. They are bankrupt. Greece still has bad or non-performing loans at 35%, Ireland at 19%, and Portugal at 12%. And we haven't seen the next serious financial crisis yet. Yet nothing seems to be done. Nothing has been done seriously to restructure debt in the southern Europe. The EU has just bailed out Greece to stop the dominoes from hitting other countries. They're pumping in heavy doses of QE to keep the banks and economic temporarily liquid and solvent. But the problems are growing even worse. The blood is getting harder to hide. Just look at Deutsche Bank, or as I like to call it, the douchebag bank. It is the largest loss in history in the fourth quarter of 2015, $7 billion without any help from the next financial crisis. Its stock is now down 89% from its highs of 2008 high and 62% from its high of 2015. He said, it's the largest bank in Germany. Why is Wall Street ignoring this? UniCredit is the largest bank in Italy. Its stock is down 94% since 2008 high and 71% since 2015 high. Benny Carnegie, another major Italy bank, is down 99% from its 2008 high. HSBC is in the UK lost 15% since Brexit, while the Royal Bank of Scotland dropped 40%. And Barclays bled 41%. Investors in these stocks are suffering torture no investor should ever endure. There's more pain to come. Depositors in the bank are willing to settling their heads in the, don't even know how to pronounce that word, glutamine. But here's the worst part. To raise capital after 2008 global financial crisis, Deutsche Bank issued cocoa bonds. they didn't want to dilute their shareholders on their senior bondholders, so they issued a new BS bond that ranked them just below the senior level. But this is pretty significant, but the 6% coupon only gets paid if the bank has sufficient cash flows, and any missed payments don't have to be made up. That's nuts, by the way. If they continue to miss payments, the bonds get converted to stock, and there's nothing the bondholder can do about that. These should have been called cuckoo, not cocoa bonds. These yields have now spiked to 12%, and the bonds have been devalued substantially already. And again, we haven't seen the next financial crisis yet. If Deutsche Bank is in this much trouble, you know many other banks are. Before the Brexit vote, most of these guys were trading at well below book value, while the broad market's trading at 2 times plus book value. Italy banker Carnegie is trading at 3% of the book value. Citibank is at 54% of the Spain's. It's basically this Banco Setega is at 58%. Deutsche Bank is at 59%. Credit Suisse is at 63%. HSBC is trading at 69% of book value. Since then, they've gotten worse. And it says here, and the bank with the highest exposure to these most leveraged and toxic of all assets, credit default swaps, largely mortgage derivatives. This is the thing that sent the housing market down in 2008. Is Deutsche Bank. It holds 10% of the 550 trillion nuclear bomb, not billion, that's trillion. At 10%, that means Deutsche Bank has 54 trillion credit default swaps on its books. JP Morgan isn't too far behind at 51.9 trillion. Citibank has 51.2 trillion. Goldman Sachs has 43.6 trillion. And the Bank of America has 27.8 trillion. Markets should be much more worried about the coming default in Italy. They should be much more worried. About the largest bank in the world failing, and they will fail. Yet they seem to be more concerned about the political factors like Brexit, and when Jelen will raise the Fed rates to 0.25%. Investors are going to get their asses handed to them. Mark my words, a major collapse is bearing down on us. Don't be among the blind investors flattened when this arrives. Now, when did he write this? Is there a date on this one here? Just recently, yeah, just actually about a week ago. So there you go, guys. I absolutely believe exactly what Harry Dent says. The facts are the facts, and you can't hide them. I don't care how much money they print. If you go back and look, Robert Kiyosaki actually talked about this. Robert Kiyosaki actually, I think he went back as Germany. I think it was Germany. Back in the 80s, I think it was. I'm not sure. But they did the exact same thing as the government's doing right now. And it ended in an absolute disaster. Do not be on the wrong side of this thing. And that's the reason why I am getting ready to load up big time on short positions. I'm not short massively yet. Actually, I'm not short at all yet. On the stock market. I do have a lot of VIX, as you guys know, but I'm looking to put on a big position short in the markets because I'm about to ride this thing down like it's never been written before. Guys, please take care of yourself. If you do own stock, if you do own some real estate and stuff like that, you might want to have a real hard look at what's actually happening and what could happen to your wealth there. If you have any money in IRAs or basically superannuation and retirement money there, please look at that, guys, because I'm telling you right now, as Harry Dent said, and I totally believe, we don't know when it's going to happen. It could be the next couple of months. It could be over the next year. But I do believe into 2017, where we are going to see, as Harry Dent, we are going to see another major collapse is bearing down on us. Don't be among the blind investors flattened when it arrives. So there we go, guys. This is just a warning. A big market collapse is coming. We don't know. But I would say over the next 12 months, we're going to see all of this start to unfold rapidly before our eyes. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course. And I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.